Guys, before we can even talk about the day that we had, we gotta we gotta start off with what's probably my favorite ratio of all time. I mean that with every morsel of my fucking ball sack, dude. I'm hardly an options expert. This is coming from Charles Gasparino. In case you don't know who this is like an anti-retail mainstream media anchor, whatever you want to call him. I think he's actually like a Fox News business associate, whatever. I'm hardly an options expert. Savvy traders I know are making a killing because they bought weekly AMC puts at $21. They're up more than the stock is today, and there's no need to exercise them. Of course. Do you know how options work? But this fucking guy, he's looking at the stock on the 1 minute chart, and he sees that it's run up from, $20 all the way up to 26, and it pulled back $1.50, and he's like, "You fucking idiots, look at you. These puts are crushing. What do you think you're doing right now?" Oh, jeez. Well, let me tell you, in case you're wondering, in case you don't know how options work, they were not green. Puts were not green today. Guys, welcome back to Trey's Trades, where we can talk fast and don't skip class like brothers by standing on and financial advice. Nor this is financial advice. Nor is this financial advice. Please take what I say with a grain of salt. Let's get into the video today. Nasty, disgusting, absolutely freaking filthy day. I mean, you cannot understate in the least a bit the excellence that we got to witness here today. You literally just watch if Amy, you're just watching Amy's just twisting purple nurples on fat cats right now. I mean, this is nice. This is nice stuff to watch, and we've got to go over a couple different things. So I've got laid out an agenda, and I'm going to point out to you a couple different levels that I'm watching. But first, let me just lay out what sort of the game plan is here today. We're going to obviously start off with AMC. I should probably layer this out as well, but I'm going to start off with the chart. I want to show you guys what the levels are currently looking like, and then we're going to look at shares on loan, and then we're going to look into the volume profile. Now, this is actually a term that I haven't discussed a lot, but this is essentially the idea of where the average cost is on AMC stock. This actually influences the way that it moves, because if you think about it psychologically, which I'll explain later, it's going to show you where there's going to be some resistance, some hiccups. And then the final thing for AMC, which is gamma options, call options, because I actually know what I'm talking about with options, unlike some fucking dummy on Twitter. We've got some monstrous things to talk about there. Next, I'd like to talk about the SPY. I saw some comments last night. Some people were like, "Trey, what about this? What about that?" Regarding, some stuff that was happening in other countries. And that's not what I was even paying attention to, because the main thing that is causing uncertainty in the market is Russia. And there's some news that came out about Russia that I think is worth discussing, because this is only going to influence the continuation of pressure on shorts across all small and mid-cap companies, which obviously includes AMC, to continue to cover positions. And you're going to see these companies continue to rally. So we're looking pretty dang good for that. After that, I want to go over Roblox. I'm just going to review essentially what I discussed in yesterday's video so that we can walk away having learned something potentially. And then I'm going to dive into what my play would be for tomorrow, which would actually be the SPY. I'm going to give you an if this, then that sort of scenario. Same as always. If this, then that for a call. Son of a bitch, why do you keep doing this? For a call and for a put. And if this, then that. Same thing as before. I'll give you what I would personally do for a entry, for an exit, for runners, for a stop loss. Ultimately, it's your decision. I'm not telling you to buy. I'm not telling you to sell. So with that being said, let's dive into it. First off, obviously, Amy just straight Hulk dicked. I mean, you look at this, it doesn't even look like a technical pattern. This is just literally like, if you can imagine the Hulk having an erection, you just witnessed that take place on candles here today. How many people a year, 2 years ago, 6 months ago, 3 months ago, thought they'd get horny looking at a chart? That's a question I have to ask you. And I want to point out a couple different levels that we're watching here. Now, I did say in yesterday's video that I was hoping to see $30. I didn't think it'd happen today. I'll own that. I'll own that all day long. Not in a million years that I think you'd see this just completely crush and reach that high in a single day. $30 in a single day. I was actually off by a little bit. I think it tapped out at like 29.70 something or so. Nope, it did hit 30. I kid. But nonetheless, there are some levels that I think are key for continuation going into tomorrow. And I'm not going to bullshit you. I'm going to lay it straight out. I'm going to give you what I think would happen. I'm going to give you the bear case scenario, the bull case scenario heading into tomorrow, so that you're prepared for whatever you want to do. If you're playing options, be careful of FOMO, right? Make a good decision. have a technical plan, have an entry plan for options, have an exit plan for options, have a stop loss, have runners, whatever. Just as long as you know what you're doing, just make your decisions based on the best logical information that you can. So with that being said, $30 is a very, very, very key mark. And the reason that I say that is because a bust over $30 could very, very quickly bring you up to where I personally believe the next level of resistance to be, the next sort of chop zone, which is at about $34.5 to $35. Now, it's up here. Yeah, 34 to 30. Yeah, 34 bucks. You can see the actual line is about 33.28, but it does stretch to the top of this wick up here, which is about $34. So we're going to say 33.28 to 34 bucks. I kind of rambled a little bit, but it's the top of this wick right here. This could be thought of as sort of a momentum level. Now, that doesn't sound like a lot, especially since today we ran $9.09, but I think there's two sort of scenarios that you can watch for and a couple of spots where I'd be watching for some form of a pullback if that is going to happen. Now, there's a lot of consolidation and a lot of chop that took place right here before a decent sized move down. You can think of this essentially as what would act then as a demand zone. The bottom of this demand zone is about $28.36. So in a worst case scenario, I personally believe that 28.36 is going to be that first stop in which you're going to see some form of a retracement where AMC tries to kind of cool off a little bit. We have to kind of take a step back and realize that over the last 10 days, AMC has gone from almost $13, just shy of $13 to $30. That is almost 300% rally, 200% rally. This is nasty. I mean, the amount of size that this has taken up over the past 10 days is really crazy. So you have to expect pullbacks. And I think a bear case scenario is that it rejects off of $30 and it comes back down to retest either the bottom of this green box right here, that demand zone, or in the worst case scenario as a bear, 26.50-ish or so. And this is deriving from where you saw a little bit of chop on the 4-hour candle. The top of this wick is basically just going to lay out as where I think you would see some form of some resistance. You're going to see some chopping around. Some, we got to go back up now. And I think that's a pretty, it's possible. I think this is probably like a 30% chance. But the bull case, which I'm more excited to talk about, I like to get the bad news out of the way first, the worst case scenario out of the way first, is I think that you're going to see this continue up. I think $30 may take a tap or two, unless going into tomorrow, which would mean in the after hours or maybe the pre-market, we get a gap up. If we gap up over $30, I think you can see this move up to that $31, $32, $33 range in the pre-market. Now, the important thing about pre-market and after hour moves, keep this in the back of your mind, especially with options, is you obviously can't buy or sell options during the pre-market or after hours. So if something moves up and it makes a huge move in the pre-market or after hours, don't assume it's going to continue that into the open. It may not. It may flush, right? I think the best advice that I can give if you are going to do that is sit back for a second, watch the open, see what happens, and then make a decision from there, because that's the most volatile, hard wave to surf that you're gonna have to face yourself with as things sort of get moving. So keep that in the back of your mind. I think realistically, coming into this week, my low ball was $30. I think you really could see this come up to that 33 mark. 33 could bring 40. I mean, it really could. 33 to me is going to be the next hard egg to crack. If you bust over 33, you really, really could see this come up into that high 30s, $40 hash. And obviously, you're going to chop around along the way, but the final destination to me where I think you'd see some rejection and a retracement is going to be that 40 mark if and only if we get this crack over $30. Obviously, I'm jacked about that. Now, the volume profile, there's a couple different things that I'd like to discuss. The volume profile sort of references where you would expect the majority of positions to be held. So if you're looking at a chart like this over here is price, right? So we'll just say $20, 25, 30, 35, and the price is moving around like this, right? Whatever. It's going up, down, up, down. Well, if we came over here and we were to lay out a volume profile, essentially where the most people hold positions, what you would expect is somewhere in the middle of price action, especially with volume and all that, is where you're going to find the majority of positions held, right? So you'd probably see, not very much held at that $20 mark. You'd see a little more held at about 25. You'd see more held at about 30. You'd probably see about an equal amount, maybe a little less at 35. We're starting to approach the volume profile in which a lot of people hold an average cost for AMC. And a crack over that is 1,000,000% going to come with momentum. And I want to tell you exactly why that's the case. If you think about this from a psychological perspective, right? What is sort of the case here? Well, if you look at this, I definitely spelled psych wrong. Psych. Oh, no, I didn't. I had it right. I said Sife. Wife. From a psychological perspective, right? Think about the people who have been holding this for a long time. I think the majority are hanging, they're chilling, they're whatever. But I can almost guarantee you, out of 4 million people, out of 90% of the stock being held by retail investors, there are going to be some who are left with a choice. Do I want to take this as break even, or do I want to take this as an opportunity to go green? Now, ultimately, I can't make the decision for him, and I'm not here to even tell you what to do. I'm here to tell you from a psychological perspective that why you would see a big move if we get beyond that volume profile where the majority of people are holding positions, because that is going to move the stock up. That's going to be a lot. This is big. This volume profile, which, by the way, coincides pretty decently close with what the average cost is for a share on loan, which is, at, by the way, an all-time high. 136 million shares is what I had clocked in earlier today, and right now it's at 137.91 million, and their average cost is in that $23 mark because the average day on loan is 78 days. I'm going to show you this really quick. Ortex gives you 85% of the exchange reported data, and the average day on loan is 78 days in total right now, which I did the homework for you, dates back to about 23 bucks, right? These levels are huge because if you can get above 30, as we already have, and you can move into that $35 to $40 mark, a lot of people that are shorts are red, and a lot of people who are longs are green, which allows you to continue momentum. You're much more, this is backwards logic, but believe me, it's the truth. People love to sell things when they're red, and people love to buy things when it's green. I'm telling you, it's just it's the psychology of the market, man. People like buying green, people like selling red. That's how things are. So if you can keep the green going, you can get people's portfolios green, right? You're going to see things really start to move. That's going to be absolutely massive, which brings me into the gamma for AMC, and that is looking disgusting. Now, a huge part of the move here for today, in case you were curious, is gamma ramping. This is call options that are getting run from out the money to in the money. In a very simple sort of way, you can think of an out the money call option as the current cost of stock is 30 bucks. Let's say that there is a call that's at $33 and the price goes from 30 to 33. This was an out the money call. If the price is now $34, ran all the way down here, this then becomes in the money. And what happens is the market makers who write these contracts up have to buy stock in the equal amount to whatever contracts existed. If they don't, it creates a failure to deliver, which you can think of as a synthetic share. Now, so far, I haven't heard a lot of talk about failure to delivers, but I'd imagine that is going to come if we do continue to see momentum the way that we have, in which case, congratulations. Pat yourself on the back, more firepower in the cannonball that you're going to be blasting. That did probably didn't make any sense at all, but that's only going to add to the momentum that is currently being had. So this is a big reason why you saw the run up that we did today, and I'm going to show you exactly why. You look at the options chain, and you can notice that there's a crap ton of open interest. I mean, the 20s, the 20 and a halves, the 21s, 2s, 3s, 4s, 5s, 6, 7, 8, 9. You see all these chains that have been run in the money for 14 April, and that's not even 01 April. You look at all these, man, I mean, it's just disgusting. You see the 5,000, 1,000, 8,000, 3,000, 7,000. There was likely 100 to 200,000 no, wait, no, more than that. It'd be 1 million to 2 million total shares that were bought purely just off of gamma ramping today. And if you think about what that means, that's pure buying pressure. That's not like, let's argue over the bid and that. It's like, you got to do it. These market makers just got to get the fill done. They're not trying to nickel and dime and algorithm this shit. They just have to do it. And that contributes to the movement that we have seen here today, which is only going to put pressure on short positions to get out of their positions, to return those shares on loan. So, beautiful day. I really do genuinely think this is going to be my statement for AMC before we dive into the other stuff. I do genuinely believe that AMC is going to continue the momentum this week. If the worst case scenario comes to fruition, I'm going to prepare you for it. I think tomorrow and Wednesday would be rest days. You might see it a little bit red, maybe 5%, 6%, which sounds like a lot, right? But in the grand scheme of things, when you consider what's actually taking place right now, it's kind of necessary, right? This is the worst case. I think you could see that. Maybe a little bit red, maybe just slightly green. Rest days aren't bad here. That's just letting the stock cool off to continue momentum, if that's the case. Worst case scenario. Best case, I think you could see this continue to rip faces off coming into the rest of the week. And that's my statement. That's my claim. That's my bet. And that's what I've got for AMC here so far. So which brings me into this, the SPY, Russia. Right now, in yesterday's video, I talked about I personally believe the uncertainties in the market are going to continue to wane off. You're going to take the nipple out of your mouth. Your mom's nipple is gone, right? You're getting off of that fear milk, and now you're drinking the green God Jesus milk. Because one of the things that I hoped would happen, thankfully, Roaring Rico is a guy on Twitter. He's a buddy of mine. He gave me the idea in the first place. So like I said before in yesterday's video, I want to give him credit. He had me thinking about this. Russia, I found to be a likely scenario to be having peace talks with Ukraine. Literally hours later, the news articles came out. Russia is now having peace talks with Ukraine, and that is going to continue to alleviate the uncertainties in the market. Please don't buy the Crim Jamer bullshit fear. Don't buy any of this fear. The market is going to rally. You can have a bull market in a recession, which is a possibility, right? If the Fed doesn't combat inflation the way that they're supposed to, you could still see a recession. But we know, historically speaking, that the market can be green while also raising interest rates. So do not let that scare you away. I think the rally is going to continue, and that is only that's a confirmation, right? Russia easing off. They're starting to have that peace talk. They're saying they're not going to be trying to de-Nazi Ukraine, which I think is an absurd statement to begin with, but nonetheless, it's obvious that they're backing off the gas a little bit. They're hitting the brakes. They're starting to lightly tap the brakes, and that is only going to make stocks go they're gonna look like a heart rate going up, man. I mean, it's gonna be nasty, and I think the SPY is gonna continue to rally in that sort of way. So that's looking good. I don't have much more to say about that until I actually get to tomorrow's play, which is going to be the SPY for me. That's what I'm going to walk you through. But I want to review roadblocks because there was actually a lot of opportunity today to make money on that. And by the way, if you'd like to join the Discord where people are able to have conversations about all of this stuff, you are definitely free to do so. It is an absolutely free thing. There's a link to the Discord in the description box down below. We do have an alerts chat. We have a how to use tab, and we've got a whole ton of free, by the way, alerts that ping off based on an algorithm that we coded. The 3 minute, the 5 minute, the 1 hour, the 3 minute, the 5 minute, the 1 hour for the 1348 and the 921. And we do have the Williams alligator alongside that. Lots of people made money today. I mean, they work. That's as simple as that. It's free. If you want to hop in, feel free to do so. But with that being said, Roblox follows some pretty key levels to a T. Now, I'm going to come out and tell you where it went wrong before it went right? I personally believe that there was an opportunity that would come up and test this downside level of resistance right here that was marked on the 1 hour and the 4 hour chart. So if I come over here to the 4 hour and I show you exactly what this looks like, it did not quite tap that, right? It didn't give you that opportunity. However, it did give an opportunity with this demand zone. This was picture perfect. This is a great educational example and an opportunity to make money. You could have easily made money off of this. It's a picture perfect example of what demand zones are. They're bounce points. I've said this before. I'll say it again. A demand zone, you're going to know, is going to either bounce or knife within minutes, because a demand zone, if this is a demand zone right here, I'm going to highlight this in green. A stock is going to do one of two things. It's either going to come down to it and it's going to chop around, or it's going to come down to it and it's going to keep going down. It's no in between. I mean, stocks either chop through these, in which case 99 times out of 100 it's going to bounce, or B, it just knifes through it. Well, in this opportunity, what did it do? It tapped down on this demand zone right here, which we had marked out for you, and it bounced up literally within 20 minutes. That was a picture perfect opportunity for a Roblox call opportunity if you wanted to do that. Now, I personally would have taken a put at the open. I'm going to tell you that right now. Maybe there were people who did on Roblox. If you made money on that, feel free to let me know. But I wouldn't have taken a put on that because I didn't reach any levels that I had marked out. So I wouldn't have had a plan, and I wouldn't have wanted to take that. I would have had to wait until this point in the day to make money on Roblox off of that demand zone if I wanted to do so, right? So that is the key takeaway for me is you were able to witness in real time. If you watch this, if you took the opportunity to try it out, right, you would have the opportunity to make money on this demand zone bounce. Shows you exactly what they're meant to do, shows you exactly how you can use them to make money, and that's where Roblox is really beautiful. And that's what I have to say about that, which brings me to the final piece, the SPY. I think there's a lot of opportunity for either up or down price action tomorrow in the SPY. What you're going to notice is I've got drawn out a rising wedge. I go over all sorts of different technical patterns in a video that's called the Options and Charting Masterclass. It's on my YouTube channel. It's about an hour, 20 minutes long if you don't know what that all is. But in case you don't know, I'll just give you a brief rundown. A rising wedge is an ascending level of resistance and ascending level of support, and a stock bounces back and forth and back and forth and back and forth between it. Right now, this is what the SPY is doing. Typically in these scenarios, it is a key for a bearish reversal. I think this is going to be a short-term bearish reversal if it happens, right? But that is a pattern that's taking place right now, but it's still not quite there yet. Right now, it's bouncing up to the top of this rising wedge. Now, the market rally that we've seen AMC come out of rising wedges, which is supposed to be bearish as bullish. We've seen the SPY do the exact same thing. So maybe it'll just bust through, which is why you're going to prepare you for both scenarios. Now, with the SPY here, the main level that I'm watching for, there's two of them. This box right here, this blue box, which I'm going to mark as red. This is a supply zone. This is going to be an area in which I think you can see a rejection, which is at about $460. The other one is $457.40. Now, if you see this reject off of 457.40 into the open tomorrow, meaning that it tests it, it tries to break above it, but it fails to do so, that's an opportunity for a put in which I would look for an exit at about $454, which is where you saw the pre-market high coming into the regular market hours today, right? That'd be the opportunity for a put. The opportunity for a call for me is if you see it bust through that resistance at 457.40, I'll be looking to take a call entry off of that break of 457.40 coming up to that 460 level, because I think that movement will happen very quick. I think if you bust over 457.40, you're going to see it come up to 460, and I think it is going to reject there. Those are the two ways that I personally would be looking to take an entry on the SPY for either a call or for a put. And if neither of those conditions are met, I simply do not make the trade. If not this, then not that, right? You have to have the conditions met. Don't try to just gamble it. Have a plan, and if the plan doesn't happen, either adjust the plan or don't execute. That's the best thing that I can tell for you. My personal stop loss, 10 to 15%, right? My personal runner, 25%, 50%, 75%, and then the rest we see wherever the top's going to be, right? Simple stuff. Full exit. 460 would be my main goal. I would take the daily expirations for a scalp. If you want to take a swing on it, give yourself some more time. Personally, that's what I would do. Do what you got to do at the end of the day. And that's kind of what I've got. So we're going to wrap this up. Beautiful, beautiful, beautiful day. I mean, this is just a picture perfect, god dang example of nasty boom boom candles. I mean, it does not get any cleaner than this. It does not get any better than this. This is what you guys have been waiting for. This is what I've been waiting for. It's what we have been waiting for. It is finally fucking time. It's time, man. I am so jacked. Not just because you guys are making money, but because all those people out there who've just said, as if markets don't go up and markets don't go down, that this is just never going to recover, which is the stupidest logic of all time. All stocks go up, all stocks go down, and just as Amy has gone down, she must come back up. And it is time. And that's what I've got for this video, baby. Catch you on the next one. As always, much love, light taps, and peace.